Mhm. Right. As long as everybody's rolling in here, we're kind of right at 7 o'clock. Welcome everybody. If you guys can, just in the meantime, can you throw it in the chat? Let us know that if you can hear us, see us, make sure everything looks good on your end before we get going. Perfect. Yeah, thumbs up, say hi. The biggest thing with this is there's going to be a ton of information, and just use the chat as much as you can. There's always going to be either myself or Ryan on that chat watching, making sure that we're answering questions as we go along. But yeah, utilize the chat as much as you can. That's going to be the biggest thing. There's going to be a pretty substantial group here. I want to make sure that we're all good. And we'll give it a few more, a minute or two here to let everybody come in, and then we'll get this going. Don't worry if
Yeah,
you
I
guys
think
are just,
that number's going up and up and up. We're gonna have a big group tonight.
oh yeah, it's gonna be nice. Don't worry if you guys have to jump out. There's gonna be so much to cover in this. My goal is to try and get us finished the majority of this by 8 o'clock. And then Ryan and I will stick around after to answer a whole bunch of questions and talk about everything for as long as you guys let us. But if you have to leave for whatever reason, that's fine. This is recorded. We're recording right now, actually. So once this is over and done, you guys will get an email sent out either tomorrow or the next day with the recording of this and a link to everything. So don't worry if you miss something, you can recap it later on. But yeah, again, thanks everybody for showing up. It's kind of nice weather out there for a February, so I'm enjoying it while we're hoping this winter kind of leaves us soon. So, but yeah, what we got here? 24 so far. We'll keep it going. For everybody here, just because I like to utilize the chat some more, I'm gonna put this link in. You're gonna see it pretty much the entire way through this. I'm gonna keep posting it in so you guys don't worry about losing it. But at any point of time during this whole process, if there's specific questions to you or you want to kind of start your own process with the whole thing, click on that link. It's going to give us a one-on-one with you. That way we can discuss everything about you, because we're going to kind of keep it generalized for this whole webinar. But if you have questions, throw them in the chat. We'll do our best to get to all of them as we're going through this. If not, we are going to probably have to wait till the end, or again, book a call with us one-on-one. We'll talk through everything with you guys. Yeah. We'll give it another minute or two. There's a ton of stuff that goes on in this. There's so much information. I'll try not to explode your heads with it, but yeah, don't worry if you have any questions on it. Majority of the time, Ryan is going to be in the chat. He'll be answering questions for you. And so just feel free to use it as much as you can.
Yeah, as Andy mentioned, I'm going to be kind of monitoring the chat all the way through the webinar tonight. So don't be afraid to ask any question at any time. Don't wait for a lapse or anything at all. What we really want to do is as we're kind of going through this, if something strikes you as you want a little bit more information, if you want to, if there wasn't something we clarified in there, just throw your question in the chat. I'll get to it right away. We are going to cover some pretty big topics today, so there are going to be some questions that are going to come. So what I typically find with questions is that if somebody has the courage to ask one, there's usually 20 people in the background that are wondering the same question. So put us to work, guys. Let's have some fun and ask any question that you like. We just ask that if it is during the presentation that you do throw it into that chat box, and we'll do our best to get that question answered right away for you.
Perfect. Yeah, exactly. So we're about 4 after here. There's a big group as it is, so we're going to get rolling with this just because there's a ton of information to go over. But again, thanks everybody for showing up. It's great to have you guys all here in the evening. We're going to get through this whole thing together. Hopefully not give you a headache with the amount of information, but when it comes to buying a house, it's simply there's a lot that goes into it, and there's so much that we can't even cover it all in the webinar. It's just crazy amounts, but we do what we can with this one. So okay, let's get rolling with this. Again, for anybody who missed it, this is recorded. If you have to leave or come back and you missed something or you're not sure what we were talking about, throw in the chat. But this is also recorded, so you will get an email with the recording. later on. If for whatever reason you guys don't see the recording by the weekend, reach out to me. I'll make sure to get you the link directly to it, but you should have it by tomorrow or Friday. Okay, so when you guys did sign up for this, whether it was through Facebook, Instagram, whatever you found it, I did mention on the first text that was sent out to you guys when you clicked the link and signed up for it that you will be getting a copy of my book and a buyer's guide, and that is 100% what I said I was going to do. So in that same email that's getting sent out with the recording and the booking link and all that, you are going to get a copy of the Complete Guide to Buying a Home book. It's a book I have developed over the last year or two. Lots of information on buying a home. It's going to be in a digital version, so you can read it on your phone, tablet, computer, whatever you want to read it on. You can do that. Plus, it's going to give you a condensed buyer's guide that pretty much wraps this all up into like 5 pages of just basic info that Ryan and I have together for you guys. And yeah, so again, that's a thanks for showing up to this. I really appreciate it. I hope you guys find some really good value in this. And if you're like the majority of the rest of us when we first were buying a home, if you guys are feeling any of this, whether it's the things you hear in the media or just talking to other people about the market as it is right now, it is perfectly fine to feel this. That's, you know, Ryan's bought his first house before. I remember buying my first house before, right? We were all feeling this because you just weren't sure of the process. And I honestly just take what I learned from buying my first house and brought that to doing this now and what I can do to make it better so that I don't feel like I did at that time. All right. So we're hoping by the end of this or else later on that we're going to alleviate all these concerns for you and hopefully give you a full understanding of what it looks like. So before we get into this, we are going to do some introductions just so you guys are aware of who's talking to you and that we're legit people and kind of have an understanding of what we're talking about. So first off, I'm Andy Goddard. I'm a realtor with eXp Realty. I am licensed in all of Saskatchewan, but my main area of expertise and my hub that I serve is Saskatoon and the surrounding areas. I live in Warman with my wife, my son, my daughter, our dog. We've lived in Warman since 2016, but I was born and raised in Saskatchewan in a small farming community of Maple Creek. Probably nobody knows about that, but I've pretty much lived my entire life in Saskatchewan minus about, a couple of years in Alberta. But this is where I love to call home. That's where I raise my family. That's where all my family lives. And that's why I like helping people find this place to be their home as well. So I've been doing this for a few years now, helped many satisfied buyers and sellers in the area. I've traveled all over to Regina and things too to help out. So yeah, Saskatchewan's where I love to call home. That's who I am. I'm also going to throw a little bit, another link in here along with the booking link. So in the chat here, that link tree address has a link to all my social medias, my Facebook, Instagram, whatever I've got on social media, both personal and business. So you can see exactly who I am as a person and what I do as a realtor. But with real estate, unless you have cash to buy a house, if you're like us, where the majority of us need to mortgage or get financing for a house without a realtor and without a mortgage broker, just doesn't work together. So that's why, as you were talking to Ryan earlier, he is my mortgage broker. We've teamed up for a while now. I haven't found anybody better in the business. That's why I work with them. So I'm going to let Ryan take it away and introduce himself and let him know a little bit about himself.
Good evening, everybody. Yeah, I'm kind of the man behind the mask here. I'm going to be the one that is monitoring the chat, and we're going to have some great questions. We're going to cover a lot of good stuff for you tonight. So again, as Andy mentioned, if you do have any questions, number one, throw those in the chat box for us because there is going to be some great questions. We've got some coming through already. And the other thing too is this is really going to be some higher level information, and every situation is going to be very specific to you. We're going to be covering things like new to Canada. We're going to be covering first-time homebuyer incentives, things like that. Every situation is going to be really unique to you. So what we always recommend is go through the information tonight, rewatch it if you have to, but click on that link, that link that Andy keeps putting into the chat box. That is a link to book a meeting with us one-on-one to really delve into your situation one-on-one, have those one-on-one conversations, and really find out about your specific needs, wants, and dreams. And we can really tailor the mortgage and the home buying process specifically to you. So as you can see, I am that bald guy on the beautiful bald guy on the screen there. I have been a mortgage broker in Saskatchewan for over 20 years. I've actually been teaching a lot of the mortgage brokers in Saskatchewan as well. I am currently with the mortgage group here in Saskatchewan. I do service Saskatoon and surrounding area, but as Andy mentioned, we pretty much cover we can cover really the entire province. I actually can do I'm licensed to do mortgages even outside of that. So I've done mortgages in Alberta, I do them in Manitoba, and of course in our home province of Saskatchewan. So if you are watching from somewhere else, we can help you out there as well. I have been born and raised here in Saskatchewan most of my life in the Saskatoon area. I've been married for almost 30 years now. It'd be 30 years this year. I have two wonderful sons, and I got a little kitty cat. Hopefully you don't see her coming through the screen, but one big happy family. And really, I've grown up with the lending mortgage industry. My wife is also a banker. So we go through, we've been growing up with the mortgage industry here in Saskatchewan for many, many years, understanding many nuances of how it works, and there aren't too many questions that throw me for a loop. We've seen a lot of different situations, so really can help you out on a lot of different avenues. So looking forward to meeting every one of you one on one, and let's jump in. Thanks, Andy.
Awesome. Yeah. So like I said, I've worked with Ryan for a few years now, and he's just the things that that guy can do with financing is amazing. There's also something I do want to touch base on with financing too. We're gonna go over all of it. It is a very good guideline of what you need, and we're gonna try and cover everything. But we do want to really reiterate on this is that it's not a one size fits all kind of thing, right? Everybody has their own differences, right? So their own pre-approval. So you could take your neighbor and you guys can make the same amount of money in a year, but you wouldn't be necessarily approved for the same amount, right? There's so many factors that go into it. So just what we talked about on here, if you're thinking you're close to it or not sure about it, book that call with us and we can figure it out for you individually, what we can do for you. So just keep that in mind through this whole process here. Okay, introduction's over. Let's get into this. Let's get into what it takes to buy a house, what it looks like, and what we need. So, again, for anybody who's just joining us now, we're going to get into this. This is recorded. You will get a recording link of this in the next day or two after we're done here, so you can recap everything that we talk about. But again, use the chat as much as you can. Ryan's going to be watching that with us. All right, so I'm going to talk about what the steps are to home ownership, what it looks like, what we cover. Honestly, I could probably spend a few hours on this slide alone, but we simply don't have that time. Like I said, I'm going to try and wrap this up by 8 o'clock and then open it up for some Q&A after. But I'm going to break this down really quickly on what it looks like when you buy your first house from start to finish. So usually I tell everybody that's looking to buy for the first time, whether they're renting, living with their parents, new to Canada, whatever your situation is, I always tell people you need to know everything you can or learn what you can about the process. You have an idea. That's what we're here for. That's why we put this on. So again, great that everybody's out here to learn. So the very first thing, and it's the most important thing when it comes to buying a house, like I mentioned before, if you don't have the cash to buy a house in full, you need that financing. That's the biggest thing you need to do before we can even start buying a house, because without the money, we can't buy the house. And also, the pre-approval is a huge thing because the major point is it tells us how much that we can shop around for a house, right? Because there's nothing worse than starting to look at houses that are in the $400,000, $500,000, $600,000 range. And you're like, oh, these are beautiful houses. We really want one of these. Then you go get pre-approval and maybe you're only approved for 350 or 400 to start, right? And it's a little harder to go from a $500,000 to $600,000 house down to a $400,000 house. So instead of getting those expectations high right off the bat, we like to figure out what is your budget going to be right now. Let's get you into something that's going to start building you equity to help you grow into a bigger house later on, and just set expectations right off the bat. All right. So again, we get the pre-approval. You meet with Ryan. You tell Ryan about your situation. What do you do for work? How long have you been here? Credit, down payment. We'll talk about all that later. But he'll take all that information. He'll talk with you about it and kind of get that pre-approval number with you. Once we get the nice go ahead from Ryan that, yep, we're pre-approved, off you go. Let's go look for a house. We kind of meet and we figure out what is the best thing for you. What's the best home for you in that budget, right? What's going to be the best fit for you and possibly your family, right? Do you need a house? Do you need a semi-detached house, a townhouse, a condo? whatever it is that's going to help and have you comfortable in that, we're going to look for the right one in your price range and start looking for it. We'll look on the MLS, which has all the listings from every brokerage on there. The thing about it is being a realtor, is that no matter which brokerage lists a house, whether it's Remax, Century 21, different agents at EXP, I, as a realtor, can get into every single listing on the market, and I can even get us into some off-market properties if we need to. But we start looking for what is the best fit for you, and then we start looking at places. We get into the actual places and we start looking at them physically, get a feel for it, understand what it looks like and what to look for when it comes to buying a house. I walk you through everything like that too, to make sure you know what to look for, the right things to look for. And then as we go along and you find the perfect house, we start to do the offer and the negotiation on that part. There is a bit of a thing right now. We are in a very low inventory market. I don't know if you guys are aware of this or not, but low inventory just means there's not enough houses available to buy. Then there are buyers in the market. So what it means is traditionally we used to be able to look at a few houses and then offer on one, negotiate that price to find it. Right now with low inventory, it gets a little tougher to negotiate because there's just so many buyers that are actively looking. Takes a little bit of that negotiation power, but as my job is to make sure your investment goes the right way, we look at the right things and make sure I do some sort of negotiations for you that I can. All right. And again, every property is different. So it's not just this is what I'll do. It's depends on the property, right? So anyways, we do that. Once we get to an accepted offer where you and the seller agree on a purchase price and all the conditions, we do enter the condition periods. That gives Ryan time to finalize the financing, gives Ryan time to make sure everything's good that way, gives us time to do the home inspection and any other conditions we have, like reviewing condo documents, things like that. Once we satisfy all these conditions we have, financing, home inspections, etc., we lift conditions when you are satisfied and the house becomes a firm sale. It's now in your hands. We're just waiting for them to vacate the premises and for you to take possession of it on possession date, which is usually, depending on each situation, it could be a few weeks to a month after we remove conditions, just again, depending on each property. In the meantime, you would set up home insurance and you would meet with a lawyer to transfer all the documents over into your name. And then we pretty much wait till possession date. Once possession date comes here, I get a message telling me that the keys are released to you. I grab the keys, meet you at your new place. We do a thorough walkthrough, make sure you're satisfied with everything in the house, and then basically walk away and you are a proud new homeowner. So that's the very, very basic steps of what it takes to buy a house from start to finish. Again, I could go over lots with this. There's just no time for that. I don't cover contracts in this webinar because again, every property is different. And there's so much in the contracts that we don't have time to go through it all. But as a first-time buyer, we do go to write an offer. The first time we write an offer, I sit on either one-on-one or on a Zoom like this and share my screen so you can see the contracts, and I go over every single line of it so you know exactly what's going on. And it's not just me sending you a whole bunch of docs to sign. Okay. Okay, I see there's lots of questions, so I'm not going to tell you guys about that. Just keep throwing questions in the chat as we go about anything we're covering here. I'm going to jump in just really quick and put the booking link back in so it's not lost here. And I'm going to move on to the financing process, which, like I said, is the major thing to do before we start purchasing a property. So I see the chat is still going, but I do want to know if anybody out there has heard of the first-time homebuyer incentive program that the government has on. Throw it in there. Let me know if you've heard about it. There's a lot that goes into here, so I'm just kind of curious to see what anybody knows about it. And I'm not talking about the first-time homebuyer savings account. This is a first-time homebuyers incentive program that the government has put on. They're basically going to be helping you with a program to buy your first home. All right, so we have a few people. Yeah, there can be. All right, so a few people have heard, which is great. If you haven't, we are going to explain it all, but there is a disclaimer we want to put out. Ryan and I will be the first to tell you. It is a good program if you need to use it. If you don't need to use it, we do recommend you don't. I'll explain. You'll see why. If you want to use it or not. If you do decide you want to use it, it does It does have benefits to it. We've helped lots of people buy houses with this program, but again, like we say, would prefer if you don't use it, just because there's the government has their hands in your house, and the government has their hands in a lot of things already. So if we can eliminate that, that's fine. But again, it is a good program. We've helped lots of people with it. It's useful when you need to use it. And every situation is different. So we can talk about that kind of more one-on-one type of thing. But anyways, so far, the government's used about $1.25 billion worth of money in order to make homeownership more affordable for anybody that's buying their first home. Number's a little light now. That's probably from 2019. So it's a little bit more than that now. But basically what it is a shared equity mortgage. All right. So what they're going to do is they're going to give you some money. They're investing it into your property. It is a second mortgage on your home. So you'll have your main mortgage, and then the government's going to have their secondary mortgage on it. It's an investment, so they share in both the up and the downside of your property value. So the thing with this money is it's not interest bearing, so it doesn't grow in interest or anything like that. You don't have to make any payments on it, and you can repay it off at any time without a payout penalty. All right. So what they're going to do is they're going to give you an additional 5% for a down payment. In order to buy a house in Canada, you have to provide your own 5% of a down payment, and they're essentially going to match it for you. I'll explain different ways that you can get a down payment later on, but just we're focusing on this for now. With new builds, they can give you up to 10%, but I don't touch a lot on new builds right now, but just be aware they can do that. And so who can qualify for using this program? And there are some limitations to it as well. So as long as you're a Canadian citizen, a permanent resident, or you're here on a work visa, but as long as you have 183 days left on it, you can qualify for this and a mortgage. If you're on a work visa and it's under that 183 days, they're going to say you're going to need a PR status or citizenship or anything like that, right? So you are still able to get this being on a work visa. Just make sure you have more than 183 days left owing on it. At least one person who's purchasing the property must be a first-time home buyer. So if you're going in with your spouse or a friend or whatever it is that you're doing with somebody else, as long as one of you has never owned a home before, you can qualify for this. The combined qualified annual income cannot exceed $120,000 a year. So again, if you're going in with your spouse and you both make over $120,000 a year together, the government feels you make too much and you won't be able to use this program. But anything underneath that, you are able to use it. If you use this program, the combined insured mortgage and incentive amount cannot exceed 4 times your qualified annual income. So easy math. If you make $100,000 a year combined, you cannot buy a property that's worth more than $400,000. Okay, so it caps you at 4 times your annual income. So again, there's limitations to this, but it's a good program if needed. The maximum down payment that they give you, including the incentive amount, the maximum down payment that you put in, including the incentive amount, cannot exceed 19.9%, because this program will not get you out of paying CMHC insurance premiums. So anything at 20% or less of a down payment, you have to pay CMHC insurance premiums on the mortgage because you're borrowing more than 80% of the property value. Now, if you go over that 20% and up, then it's an uninsured mortgage, but this program will not let you get out of paying these insurance premiums. And there is a bit of things that go with that, so I will explain it a little bit here. There is another first-time homebuyers incentive or first-time homebuyer program that can go along with this. So if you have RRSPs saved up, you are able to withdraw at least 30 or at most 35,000 per borrower from your RRSPs. You can use it with the incentive as well, so they're not exclusive. If you use one, you can use the other if you choose to. The only difference between the RRSP program and the incentive money they give you is that with the RRSPs, you do have to bring them out. And then within the first 2 years of using them, you have to show that you're starting to pay that back. And you can pay it back in little installments as you go, but they just have to see that you're paying back into it. Where the incentive, you don't make payments on it, okay? If you choose to use your RRSPs before you start getting into everything, please reach out to your provider and make sure that you can do this. Ryan and I did run into an incident almost 2 years ago now where they were going to use their RRSPs. We got an accepted offer on a property. We started the financing process. Then we found out they couldn't use their RRSPs and it crashed the deal. And now they're back to getting their down payment in order to buy a house still. So before we just get into everything, make sure that you're able to use that first. Reach out to your provider, talk with us, let us know, and we'll see how that works. Okay, so anyways, that's the RSP program. Back to the incentive. When do you pay them their money that they give you back? So either, let's say in 5 or 10 years, you decide you want to sell your home and go into something different. When you sell your home, you pay them back their money with the proceeds of the sale. Or anytime during the first 25 years of your mortgage, you can pay it back either out of your own savings in one lump sum, or you can refinance it in your mortgage. Then the third and final way is, let's say you live in your first house for the whole time, you pay it off, you're free and clear. You either pay it off again by a lump sum you have saved up, or you can take out a small equity loan on your house and pay it off that way as well. So there are some options of paying it off, but they need to be paid off at once. And I'll explain why you can't make payments on it. It has to be at once right away here. So here's how this investment works on your property. Okay, they are investing into you. They want to see their money grow just as much as we want to see your property value grow. So let's say you bought a house at $400,000. They're going to give you 5% of that, which is $20,000 to match your 5%. So then you decide, I'm going to go pay their 5% back. It has to be based on the value of the home at the time you're paying it off. So let's say your value rose to 500,000. Instead of paying them 20,000, you now have to pay them 5% of the 500, which is 25,000, right? So your property value grows, so does the amount you have to pay them back. It's 5% of what your house is valued when you go to pay them back. That's why you can't make payments, because they need to know how much your house is worth. On the flip side of things, if your house value falls below what you paid for it, you only pay them back the 5% based on that, because it's like an investment. All right. But in the long scheme of things, right, if your house value grew to 500,000, you're paying them back an extra 5,000 that they gave you. You've gained $100,000 in equity in your house. Paying them an extra 5 isn't really that big of a thing, right? If you think about it that way, even if it rose 25,000, so 425,000, it's an extra $1,250 that you have to pay them back. Okay, so it's not crazy amounts, but just be aware that you will have to pay them back based on the value of your home. So we do say, if you do use this program, try to pay it back kind of as soon as you can. That way it's not growing in value and you have to pay them more back, because I don't like paying the government more money than I have to, just like probably everybody else, right? So that's kind of where that lies. So probably a lot of people asking, where's the benefit to this? They're going to give me money, it's going to grow. What's the benefit to me? So here's where the benefit of this is. So there's a few benefits that this is going to help you with. So the first one is, let's say again, you bought this house at $400,000. The minimum down payment you need to provide is $20,000. Then you're going to borrow $380 from the lenders. So that's bare minimum. They're going to chip in their 5%, which essentially doubles your down payment. So instead of putting $20,000 down, you're putting $40,000 down, which means you only have to borrow $360 from the bank instead of that $380. And so now the amount that you're borrowing is less, so your monthly payments are going to be less. And then also, when I talk about those mortgage insurance premiums with anything under 20%, at 5% down payment, that's the bare minimum. So that's when they're going to be at the highest point, is at 5%. But now they're doubling that for you. It's now 10%. Those insurance premiums just drastically dropped. If you go to 15, they drop even lower till you hit that 20% and you don't pay anything. But again, this program won't let you get to 20%, right? But the more you put down, the less insurance premiums you have to pay, the less you're borrowing from the bank, the less your monthly payments are. So that's what they're trying to do for you, is to start you in a starter home, have those lower monthly payments to help you out. The other side of things is, let's say you're approved enough for, let's say, a $400,000 house, but your down payment isn't quite there. You need a little bit of a boost. These guys are here to help boost you up, maybe help you out into a higher level of home. Ryan can explain that one a bit better than I can. However, we have helped people both ways, right? People have used this program. It's very beneficial to help you out, again, if you need to use it, right? Ryan's going to touch on a new to Canada program later on. That's going to explain how this ties into it a lot. And it has worked wonders for us to get people that are new to Canada as early as 6 months of being here into a house. Okay, so it is a helpful program. Okay, so I just want to see, yeah. So if anybody has any more questions on the incentive, keep throwing them in the chat. That's just the incentive. They're going to help you out a little bit. But again, if you don't need to use it, don't use it. But again, it's helpful. So I'm going to jump into not getting pre-approval is a big issue. And again, I touched a little bit about this earlier, is that when you are buying a home, getting a pre-approval is so huge before even looking at houses, because we need to know what that budget is, right? Again, there's nothing worse than looking at very nice properties that are out of your price range and then having to say, okay, this is what we're at, this is what we have to look at. It's really hard to come down from that. So it's really great just to set expectations. A little while ago, I guess I would say probably a couple of years ago, it used to be common where people would look at places, then go get pre-approved and then buy the place. But with low inventory market, places are selling pretty much the same day they go on the market. So there's no time to look and then go get pre-approval to see. We need to have that pre-approval in place now. That way, when you see the house, you like it, you want to offer on it, we know we are good to offer on it. Okay. That's why this is such a big importance. Okay. So there's three things that make a pre-approval, and all three of these things literally have to connect with each other to make it work. If one of them doesn't really fit right, it affects your pre-approval. So there's a lot that goes into this too. A lot of things on everything that goes into it. So again, this is the part where I said not one shoe or one size fits all. Everybody's got different things. I'm going to touch a lot of it on here. So the first thing they look for is your credit. All right, they want to see about 620 to 650 for a credit score is usually roughly the starting point. Anything above that is great. Anything below that, you might have to look into different options of mortgages, which we can get into later. But yeah, 620 to 650 is a good start. They want to see that there's no debts that are accumulated. There's no creditors calling. You're not in a bankruptcy. You're not in debt consolidation, right? They want to see that you can make your payments on things, your bills are paid on time, you don't have maxed out credit cards and loans and things like that. So they need to look at that, make sure that you know what you do when you are loaned money. Second, they want to see income, right? They have to know how much do you make, so we can know how much you can afford to pay for monthly basis and whatever, right? For the majority, like for people that have been in Canada for a long time, usually they want to see about 2 years worth of tax returns to see kind of a baseline of what you make and what you can afford. If you're on a salary position, that's even better. Salary position, at least your employer can give us a letter stating this is your salary, this is how much you make per month or per year, and that's easy to work with. For anybody, again, new to Canada, there's a great program Ryan's going to touch on that is simply because you don't have credit built up yet and your income, you don't have 2 years worth. There's a new to Canada program that will help you kind of bypass that, which Ryan is going to touch on. And then the third and final thing is down payment. And that's going to be the big one too. You need the amount of down payment you have will affect how much you get approved for as well. So let's say again, like I said, if you're approved off your income and credit for 400,000, but your down payment is 15,000, it's going to cap you at 300,000 because 15,000 is 5% of 300,000, right? So if your income and credit can support it, but your down payment's not quite there, that will affect how much you get approved for. Now there is 3 to 4 ways to get a down payment instead of, the first one is the traditional one, which is your own savings. The second one is that RRSP program I touched on. The third way is getting it from a gift from an immediate family member. We call it the gift of bank, or the bank of mom and dad, but it's a gift from, an immediate family member. So parents, grandparents, brother, sister, right? If it gets a little further away from that, it gets, might not be able to use it at all, right? So aunts and uncles and cousins and things like that, right? It has to be immediate family members that can help you out. The fourth way is a little bit more inclusive. If you are part of the Métis Society of Saskatchewan, they do have a first-time homebuyers grant that gives you up to $15,000 for a down payment and help with some closing costs. Again, you have to be part of the Métis Society. So if anybody here is part of the Métis Society and wants to know more about that, reach out to me. I have some great documentation on that and who to talk to get that rolling with them, and then it just works with the rest of the pre-approval part. So that's the 3 things they need from you. Again, everybody's different, everybody's jobs are different, down payments are different, but here's a couple key things to realize with this. We have run into this before with a lot of people that are new to Canada that are just coming in. If you work at a commission-based job, so realtor like myself, if you're selling cars, or if you're working at a company like Uber, Skip the Dishes, DoorDash, those types of jobs, because there's no set hours, schedules, pay kind of things, you kind of just work on your own time and pace. Lenders can't use that as steady income until you have 2 full calendar years worth of tax returns to use that income on, because it's so sporadic and it's based off of the hours you choose to work. So again, if you are working those jobs, we can't do much with you until you either have 2 full calendar years worth of tax returns for it, or unfortunately you have to find something that has hours and a set pay that we can show lenders that this is the job they're working on, this is what they get paid, and here's the paychecks to support those hourly wages and things like that. Okay, so just keep that in mind, that that's a bit of a setback if you are working those jobs. Again, with down payment as well, Ryan will touch on this with new to Canada, but for anybody who has come over and is new to Canada and you have money across seas that you're going to bring over to use as a down payment, that's great. It's definitely able to do that, but just be aware, if you're using it, all the money you're going to use for a down payment has to be over in a Canadian bank account and sitting here untouched for 90 days, right? So the more money you bring over, it just keeps resetting that counter. So if you want to use it, please get it over as quick as you can. That way we get that 90-day countdown started, okay? But yeah, so those are the things about down payment. I see there's a lot of questions flying by, and Ryan's a rock star on it right now. I'm going to put this back in again. The booking call, if you want to know more about what you can get approved for, reach out to us. We'll get that process started with you. But yeah, so then the last thing I want to touch on with the pre-approval as well is that they're underwritten. So they will review your income, your credit, your down payment source. But the beautiful thing about it is it's reliable, and it tells us that maximum amount that we can purchase, which puts us into the range that we need to shop for. That is the biggest thing. And then that we can take that when we are shopping for a house, say, yes, my buyers that we're working with, they are pre-approved, they are able to buy it. We just have to get the finalized approval from Ryan, and that helps a tremendous amount. The last little thing, okay, yeah. So there, I'm going to pass it off to Ryan. Ryan's been killing it. I'm going to pass it off to him so he can talk about the New to Canada program. All right, it's all yours, Ryan.
Let's take myself off and mute there. So yeah, Andy's doing great here. We're rolling along. We're getting lots of great questions coming in. Really kind of, I just wanted to touch on the first time homebuyer incentive. We've got kind of some great stuff coming in. Really, as Andy kind of touched on, this is a program that is designed to assist people that need it. Really, it's a great option for it's designed really for that lower income. There is an income amount with it that you can't go over. So the household income is $120,000. So really, it is designed for people that might have less means or ability to save that down payment quickly. So it's really designed for that, you know, that maybe that lower income family, or somebody that might not have the ability to quickly generate a down payment. The other option that it's really good for is pairing up with the New to Canada program. And what we really go through with the New to Canada program is, you know, we have a ton of new people coming into Canada every year, and our immigration policy here in Canada is very open. We typically can have, you know, a million five people, 2 million people coming into Canada every single year, and trying to find housing for that amount of people can be a bit of a challenge. And we also realize that coming to a brand new country from somewhere else in the world can be a bit challenging, trying to establish things. As Andy mentioned, the three pillars that we look at: income, credit, and down payment. You know, coming to a brand new country, I'm going to have to find a job. Is that job going to be a full-time, you know, brain surgeon right out of the gate? Probably not. So really kind of working with, you know, the new immigrant friends that we do have coming over to assist them with some options to get into home ownership sooner. And that's really where the New to Canada program kind of, you know, really jumps to the forefront. Knowing that, especially brand new to Canada, you're not going to have a huge track record of Canadian credit. That's typically the big one that most people are missing. Most people do come here, they can get income quite quickly. They can have down payment maybe coming over with them from their country of origin, but establishing that credit pattern that the banks really want to see can be a bit of a challenge out of the gate. You know, typically when you come over, lots of the immigration programs are very well set up to get you that bank account at the bank of your choice, get you set up with that credit card to start building your credit. But then it's really time, right? The bank wants to see that you not only have that credit card, but that you've used it well for a certain amount of time. So they're confident that when they do give you a larger mortgage, a larger debt, that you're able to handle that properly. So again, one of the biggest segments that we do see in the first time homebuyer market, especially, and one of the largest drivers of housing growth in Canada is that new to Canada segment. Okay, so what new to Canada typically is defined at, as you mentioned, can see on the screen there, people that have immigrated to Canada within the last 5 years and do have a limited credit history. We can use Canadian bank statements, rental histories, utility payments. It's called alternate credit sources. Typically, one of the questions I got quite early, which was great, was how long do I have to be in Canada to use the new to Canada program, and what sort of down payments and credits do I need? So what we typically look at is, the new to Canada program does have options as low as 5%. And the different percentages on down payment, usually that kind of correlates to how much credit the bank is going to want to see. So what they ask for is that if you're coming in with a minimum down payment of 5%, they do want to see 12 months of credit stability from somewhere. If that's coming from lines of credit, credit cards, and things that are on the credit bureau that you get at the bank, great. Those are great. They're very stable lines. The bank can see those right on your credit bureau. But those are not the only options that we can look at. You might come over here and only have one credit card, but then we can start looking a little deeper and saying, have you paid a power bill where you're renting for 12 months? Do you have an SGI car plate that you put on your car and you've had that payment for 12 months? Really, any structured payment for a 12-month period that shows that you've made that payment on time is considered alternate credit and can also be used to support that credit pattern. So 5% down payment, you typically need 12 months of credit to show the bank. If you up that down payment a little bit to 10%, that requirement drops down a little bit to 6 months. We only have to show 6 months. And we can show things like bank statements. We can show things like, again, anything on the bureau, credit cards, power bills, things like that. Really anything that we can show a 6-month pattern with 10% down really works quite well. The biggest thing that I want to talk about a little bit with the New to Canada program is we do have to have a certain status when you're coming into Canada. Lots of people do come here on a permanent residency status. That is absolutely one of the ones that does work very well with the program. The other one is a valid work permit. If you're here on a work permit or a permanent residency status, as long as you do have on the valid work permit 183 days left on it. So we do want to make sure that it is still going to be valid when you are getting your house for 183 days. Both those programs work quite well. The one that I will mention that doesn't quite fit underneath the New to Canada program is anybody here on a student visa. So if you're studying or on a student visa, that status unfortunately doesn't fit within the New to Canada program. Now, this is kind of where I want to tie in that first time homebuyer incentive. Lots of people coming over and immigrating into Canada don't have the 10% cash that they can dump onto that down payment amount right away. So if you're coming here and you are within that 6-month window, that 6 to 12-month window, you do need, of course, that 10% down payment until you get that 12-month history. So you do need a little bit more down payment than just your original 5. So what we can do is actually take your 5% down payment, add on to it the first time home buyer incentive 5%, merge those together to get you that full 10% down payment, which would allow you to really qualify for that New to Canada program after a 6-month period. So it really shrinks up your timeline, having that additional 5% coming from the first time home buyer incentive. Now, if you got the 10% down on your own in cash, great. We'll just use that. You still qualify for the program. You don't need the first time homebuyer incentive, but it's really just a program that if you need it, it is there. It's an additional help for somebody that might not have that full 10%. So know that the first time homebuyer incentive isn't for everybody. Really, this is really designed for people that maybe need a little bit additional down payment help. Okay. Now, a couple of things. Andy did touch on these. One of the things, a couple of the changes that have been brought into the new to Canada program specifically is we used to have all the down payment, at least the first 5%, coming from your own savings. Now that has changed a little bit. You can also now add on gifted options. So if you have a family gift, it's a non-repayable gift from an immediate family member, that being mother, father, son, daughter, grandparents. Does have to be an immediate family member, but you can also use that as your own 5% down now. So if you have a gift from family that is going to be part of your 5%, that now qualifies for the program. Okay. Now, the three pillars, Andy mentioned these right in the beginning. We typically look at credit, we look at down payment, and we look at income. So I want to touch on how those kind of fit into the New to Canada program. As I mentioned, the credit requirement. So if you're using a 5% down payment program, we need 12 months of credit support for you, whether that's on the credit bureau or alternate credit. If you up that down payment a little bit to 10%, we can get you in with 6 months worth of credit support using the first-time homebuyer incentive add-on as well. The next piece would be that income requirement. Big thing on New to Canada, they do want to see that the applicants do have at least 3 months of full-time income. Okay, so they want to know that there is 3 months worth of full-time income to qualify for the program. We do see a lot of people coming over and immigrating into Canada, and they get into things like temporary contracts, they're self-employed, things like that. With those types of incomes, there is a little bit of a different requirement. Usually with contracts or self-employment or anything that has an overtime or a bonus structure to it, they want to look at least a 2-year history of that. So know that where you're coming in, it's really that permanent base salary and employment that does work quite well. If there is some sort of a different type of income, a self-employment or a contract, we'll talk about that and let us know. We'll really kind of work with you to let you know what the timeline requirements for that are. Okay. And of course, last piece, and Andy just touched on this, the down payment, really making sure that we do have a 90-day track record of that money. Ideally, we want those funds to be in a Canadian account for the 90 days. We do have some lenders that will backtrack it into your previous accounts of origin, in your previous accounts, your previous countries of origin. We do have to see wire transfers, things like that. So ideally, the quicker you can move those funds into your Canadian bank account, we can track them for the 90 days. It's really simple. So ideally, the 90 days in a Canadian account, but we do track it for the full 90 days, no matter where it does come from. So as you can see, lots of great programs to help newcomers coming in, really working with them to help them with maybe some smaller credit options, and adding that first-time homebuyer incentive in to help you with the down payment options to get you into housing sooner. So if you do have any questions, click that link right away, guys. Let's look at your individual situations one-on-one. We deal with New to Canada friends all the time. We've done a ton of them even so far here in 2024, working to make sure that we not only let them know all the requirements that are needed, but to really work with all the options on the program to get all that we can for you, and making sure that we can maximize that purchase price to get you into the house that you want. Perfect. Back to you, Andy.
Awesome. Thanks again, Ryan. Appreciate that. So yeah, there's a lot of programs that are going to help you guys that are new to Canada, first time home buyers. There's lots of programs. It just, again, we just got to plug it into what you have going on and figure out the best solution for you guys. So I'm going to touch one more thing on the pre-approval side of things, and I got to start ramping this up a little bit. We are dragging on time here. So last little bit is co-signers. We don't use them very often at all, but it is a possibility if you need to use one. Same idea. If you don't need to, great. If you do need to use it, it is an option. If you have a family member that's willing to co-sign for you, that's great. As long as they live and reside in Canada, same as the other stuff, right? Canadian citizen, permanent resident, work visa, things like that. As long as they can basically be approved for a mortgage as well, they can be a co-signer for you. Okay. There is risk to it. So obviously they're co-signing, saying that you are going to make your payments, you're okay with this. But if you don't make your payments, the lenders will come after the co-signer. So it is a risk. They need to realize that. You can still use a first-time home buyer incentives with a co-signer as long as you don't exceed that $120,000 a year. They are committed to being your co-signer for as long as you can't be approved on your own. But once you can be approved on your own, then we can go about getting them off the title of your house and free and clear. There is extra cost of that later on, not up front though. It'll be the same thing purchasing a property with a co-signer, no different than if you do it on your own. But when you want to get them off the mortgage, you do have to pay the lawyer fees to get that swapped around. And the last I heard, it was roughly around $700 to $800 to do that. So if you are using a co-signer, just talk with Ryan, make sure that's the absolute last resort. And it's still a possibility, but just be aware of that. Okay, so that's it for the finance, or well, there's one more for financing, but I'm going to be really quick about it. And that's an issue of using your bank. Now, everybody comes over or they have their bank, whether it's savings, checkings, accounts, investments, things like that. There's not a bad thing about, talking to your bank about this type of things, but I am going to show you why it's beneficial to go through a mortgage broker like Ryan. Why Ryan is super helpful about this and how it can make it way more beneficial for you than using your bank, okay? And this is me coming from me, where my own dad is a general manager of a credit union in a small town, Maple Creek. So I'm tied with him with my stuff, but Ryan is my mortgage guy. He's amazing at what he does, and this is why. Okay, real estate happens all day and into the evening and on weekends, right? It's just constantly going. Majority of us do stuff on the evenings and weekends because that's when you're off work and have time to look at places and do things like that. Banks work normal bank hours. So if we're putting offers in at 7:30, 8 o'clock at night, and they're closed and we need an answer right now, if I need an answer right now, I open my phone and I say, hey, Ryan, what about this? How are we doing with this? And 9.5 to 9.9% of the time out of 10, Ryan's going to give me that answer, right? As long as he's not busy doing his own thing after hours, but Ryan's going to give me that answer shortly, especially if he knows we're in a live offer situation, right? If we need to get a hold of a bank, which happened to me a few times, is that they don't answer you till the next business day and it's too late by then, okay? And then so either you may lose on the house you're offering on, which is a huge issue, or we have to risk it, which I don't really like doing, and hope for the best the next day, okay? Very bad for communication sometimes. Had a lot of issues with banks. There's a big story about one that almost cost us a nice family that was buying a house with me. We sold their house and found them their second house, and the bank completely messed up their mortgage because they tell me, like a lot of people say, I've been with my bank for so long, they've treated me right, until they didn't treat you right. And that's what happened to these guys. And I don't want to see that happen to anybody else. It was bad. It almost made them homeless. It was terrible. Ryan saved the day with us because he managed to do what he does and fix it. And I just don't want you guys to say, well, I've been with my bank lots of times and they've always treated me good. And then it happens where they don't. Okay. Not saying they all do that. Again, I'm not. There's some really good people that have worked with at banks, but I've had a lot of issues with banks too. Okay. So the thing about using a mortgage broker over a bank, so this is Ryan. Ryan is amazing at what he does. He has access to over 30 different lenders' products, so he can shop around, much like I can shop for a house for you. He can shop rates for you. He can shop programs for you, lenders for you, things that make it the best for you, where the banks are restricted to their own product. Okay. He works the same hours as I do, evenings, weekends if we need to. And the banks, again, work their normal bank hours, right? So if you can't get a hold of them, you can't get a hold of them. He's going to offer you his best mortgage rate up front. This is what it is. It's going to save you money, where the banks can offer their bank posted rates, which is sometimes higher. And there's a very, very, very strong chance that Ryan is going to beat their rate or at least match it. But even if he beats their rate by, 0.1%, it may not seem like much, but over time it can add up, especially if it's saving you, let's say $100 a month. Doesn't seem like much, right? You're going to save $1,200 over the year. It's not so much. But when you take that over 10 years, because you live in houses for so long, 10 years is $12,000. I'd rather see you take that $12,000, add it into your equity and add it into a down payment for your bigger house than just giving some bank $12,000 because they had 0.1 interest more, right? That's where the benefit lies too, is that Ryan can save you money. That's our job, is to protect your money. And we work for you to make sure you get the best investment and save the most money, okay? Like I said, Ryan works for you in the best interest of you, where the bankers still have to work for their bank as well as you, right? So they're kind of in the middle ground. And again, you can call or text us anytime with any questions, whereas I've ran into it where the banks are harder to get a hold of. Okay, very hard. Some days it's been a nightmare. One last thing I want to touch on that too. is not all mortgage brokers are the same, just like not all realtors are the same. Honestly, everybody in every position, there's good and bad, right? I've dealt with some bad mortgage brokers. The latest one that we've had was they used a mortgage broker out in Ontario because that's where their friend said that they should use this person out in Ontario. And Ryan can attest to this because we worked this through. We lost 3 accepted offers on properties where they crashed the deal because this mortgage broker out in Ontario had no idea how things worked over here in Saskatchewan. It was a disaster. So I finally said, you know, if we're going to keep going this route, we need to find somebody who's going to make this work. I said, you should just talk to Ryan, listen to what he has to say. Ryan talked to him, and boom, the first time we found a house using Ryan, we crushed it, and they took possession earlier, actually on the 30th of January. So banks, it's not just banks, it's also mortgage brokers. That's why I work with Ryan the best. Ryan knows what he's doing. Ryan can help out a lot. So it's a very good benefit to speak with Ryan about all of this. Okay, I see that I have oh sorry, I forgot about the last part of it. So banks do have bank penalties. We're going to try to get you little to no payout penalties when you break your mortgage. And breaking your mortgage simply means that, you know, it's a 25-year mortgage, right? If you have to move within the first 5, 10, 15, 20 years or whatever, you're essentially breaking the mortgage. But people move for many reasons: upgrading, downgrading, new jobs, moving different places, right? And we don't want you to be penalized for just simply moving. Bank penalties can be expensive, but Ryan's going to make sure you have little to no payout penalties, but you can't guarantee no payout penalties. But he's going to at least show you what that looks like. Okay, so again, talk with Ryan, let him know what you've got going on, see what he can do for you. It's so beneficial. Book that call right there and see. Okay, so I have about 4 minutes. I was hoping to wrap this up by 8 o'clock. I got a couple small things to talk about on the real estate side of things, and then we'll smash into the Q&A and get you guys out of here. So I'm going to move relatively quickly through this, but bear with me here. I typically don't talk a lot about new builds because most first-time buyers are buying resale homes, not brand new houses, but some do, and so I got to talk about this. Buying directly from a builder is kind of the same as buying directly from a bank. They're there to sell their product and their product alone, whereas I can show you different builders' products, different options, and also resale homes that may be a better idea than buying a new build, right? Builders are going to try and sell their product alone. I can still negotiate for you. My job, again, is to work for you. You're essentially my boss. I'm here to get you the best deal I can. And if I can negotiate anything I can, I will do that for you. Builders tend to not negotiate purchase price because if they're, let's say, building a whole block worth of houses, if you negotiate some money off the first build, then every other realtor is going to see that they took some off. So we're going to offer them less. And then it keeps going less and less and less and less. So their $450,000 house now is turning into a $360,000 house. And they don't want to do that. So they typically stand firm on their price, but we can negotiate things in like appliance packages if needed, air conditioners, different upgrades throughout the houses like natural gas fireplaces or additions or things like that. I can still negotiate things in for you that can knock some off and help you out and get you a nicer home. I've had also people ask, does it cost any more or any less on my end to go directly to a builder? And the answer is no. Whether you go to a builder directly or use a realtor, it's not going to cost you any different. It's just you're losing negotiating power. You're not getting the knowledge of different other builders, right? Different options that will fit you better. Somebody to work for you, and not just hopefully that the builders are going to give you a good deal when you need somebody to work for you on that. You want somebody that's going to look out at the contract for you because the builders are going to give you a contract to sign. But you need somebody who's there to look over it with you, review it, make sure there's no hidden costs or hidden things like if the price of material goes up, so does the price of the house that you're buying is going up. And that's a big issue, especially if you're financing, okay? So you need somebody in your corner. And nothing wrong with buying a new build. Buying new builds are great. I do it, you know, quite a bit. It's good, but there's just things you got to watch out for, and you need somebody there that's going to help you with that, okay? Next step here, I do want to ask a question. I do see there's questions coming. I love it, but I am going to ask a question here while we're still got everybody. Home inspections are huge when it comes to buying a home, whether it's new build or resale. Can anybody tell me, give me an idea, throw a number out. I'm just curious here. Does anybody know what the rough cost of a home inspection in Saskatoon would be? Just let's say for a detached house, 3 bedrooms, 2 bathrooms, things like that. Not getting crazy. Just throw some numbers out. I'm kind of curious to see. Whew. That's a big number. I wouldn't be if 5,000, I should be a home inspector. No, not quite that high. Since we're running short on time, I'm just gonna, well, Hannah's close. Hannah, you're close.
Up close there.
Yeah, I was like, man, we're way off, and I need to do a new job here. But the guy that I recommend is he's about 450 for a detached house plus GST, so it comes out to about 460, 470. Anything less than a detached house, like a semi-detached house, townhouses, they all get cheaper from there, but they're about 460 for it. And it may seem like a high price for this, but honestly, you get every penny's worth for a home inspection. A home inspection is built into the contract. It is a condition, and the condition has to be satisfied for you to purchase a property. If you aren't satisfied with the home inspection because they found major issues like mold or massive issues with the foundations, infestations of something, right? You can walk away from it and not purchase a property free and clear, no issues. But it's also going to cover you with everything else. They're going to look, and they don't, honestly, the guys that I recommend, they don't miss a thing. Like they're there for hours before we show up to go through the walkthrough with them, and they look at everything. They test every appliance in the house. They test every piece of electrical, plumbing, gas, whatever's in the house. They're going to look at it, check for it. They're going to look through their walls with their infrared technology to make sure there's no moisture damage, make sure the insulation's correct. They use their drones to fly over the roof to make sure there's no issues with the shingles, there's no leaks coming from that. They poke their heads up in attics, right? There's a ton that they look for and test that that takes some hours, and they're going to give you every single thing they found in that house in a book and give it to you right when you're done. That way you can look in your book and see, you know, what needs to be fixed, what's some maintenance items that I need to look for. Same with buying a car, right? They're going to say, this is what you have to do to maintain your car. Well, they're going to give you this and be like, this is what you need to do to maintain your house. And I've never been to an inspection yet that they haven't found something to note, right? They're going to find something, but it's the major stuff that we need to look for. And so the major stuff is stuff that we could either walk away from the deal from because it's that bad, negotiate some off the purchase price to help you guys fix it, or get them to fix it before you move in. Depends on what the thing is, and every property is different, right? But they don't miss a thing, and it's crazy, and they're going to find things. But some major issues are things like electrical issues. I ran in one where a dryer was on the wrong type of fuse, so if the fuse tripped, only half the fuse tripped, and then it would make a very serious fire issue. All right, so we had them bring a professional electrician in to fix it and make sure it was all good. We've had furnaces that weren't quite working properly, where they have where they had the professional plumber come in and fix the furnace to make sure that was working. Actually, the last place that I took possession on the 15th here, we walked through the house when we first looked at the house, and it was freezing cold in there during -30. And I noticed that the heater wasn't working. So I texted the other agent and said, look, your people's heater is not working, and we're going to write an offer on this place, but you guys need to have this fixed for this offer to continue. And they did. They brought a plumber in, they fixed the heater, they proved that it was working properly, and we closed on the house. But they find things like that that help us negotiate when you're purchasing this house, right? So they found so many things. My house, I'll just say with my house, when I bought it in 2012, no, sorry, 2016, it was built in 2012, so it was 4 years old. My inspector noticed that there was a leak coming from my upstairs bathroom into my main floor bathroom, like a very small leak, like a drip from the shower. And all that needed to be fixed was a little bit of caulking around the shower, and it sealed it up, and there was no issues. But if I never paid for that inspection, I would have had so much water damage from the years of using it without knowing that I'd have insurance claim. It would cost me more money in the long run to fix it, right? Just the things they find is insane. So it's worth every penny, and it helps us get out if it's a bad issue. I've yet to walk away from a house deal because of a home inspection, but that's not saying it won't ever happen, right? But we make sure to look at things doing the walkthrough when we first look at the house before we offer on it, to make sure nothing looks out of the ordinary as much as we can, right? So it could save you lots of money by getting this done, like $20,000 or more, right? Depends on what they find, but it is ridiculously great to get this home inspection. I've never told anybody to buy a place without it. Honestly, if you tell me you want to buy a place without getting a home inspection, I ask you to sign something that states that I said to get a home inspection, but you decided not to, so I'm not liable for what can be found afterwards. Even when somebody buys a new build, I still recommend they get a home inspector for the new build, even though we have new home warranty, to make sure that the builders have built it correctly, right? Just huge things like that. So yeah, anyways, I'm a little bit running over time. One more thing to cover and I'll let you guys get out of here. Buying a condo. If anybody buys a condo, so whether it's an apartment style, a townhouse style condo, anything that has a condo corporation attached to the building, there's what's called an estoppel package. It's a condo review document. Okay, this is mandatory that comes to you when buying a condo. What isn't mandatory is getting a lawyer to review it. However, you do have to pay for a lawyer to finish the sale of your home. And so you just get the lawyer to review it. As long as you are going through with the same lawyer to the end, they're not going to charge you anything extra to watch or to read this condo review for you. Okay, so there's so much that goes into this. It's a massive book of information as well, but it has everything about the condo. So it's gonna, you're gonna know what your condo fees are, and it's gonna show you where all the condo fees are going. And the major ones is like the reserve fund. The reserve fund is huge when buying a condo because we need to know how much they have saved up for when they need to fix something, right? Like if the roof needs to be fixed, siding needs to be fixed, whatever needs to be fixed on the condo, they have to have enough money to fix it. If they don't, chances are they're either going to raise condo fees to overcome that, or they're going to do what's called a cash call, which they go to every unit owner and ask them for money to help fix the property. So you need to get this reviewed by a lawyer to make sure that's not going to happen anytime soon. And also for them to show that this place is being run correctly and that they know what they're doing and that it's being audited correctly. It'll also show you the maintenance of the building, what's been fixed, what needs to be fixed, what company is in charge of grass and lawn care, and what company is in charge of snow removal and garbage and all that. They'll show you all the bylaws of the property, so what you can and can't do with the unit. It'll be like there's just so much into it. They'll make sure that what the insurance on the property looks like and everything. It's crazy. So definitely get that looked at by a lawyer. I'll look through it with you too, just to make sure I don't see anything out of the ordinary, but the lawyers are going to be the ones to catch something. And the lawyers that I recommend, and a lot of other lawyers I've worked with, they'll be the first to tell you to not go forward with this, or that it's a good investment as well. So the people that I recommend to you, Ryan especially, but home inspectors, lawyers, the people that I work with, I've worked with them before and I know how they work and I know they do a good job. So that's why I recommend them to you. And so, yeah, that's things that's going to save you money that way. Cash call is a huge one. Condo fees are going to be a huge one if they decide they want to raise them. The other thing is bylaws too. So there are some bylaws in, let's say, apartment style condos that restrict on what you can do for renovations. So some may say you can't rip out the carpet in the main living areas and put laminate down or hardwood down, because now that sound barrier is removed and it's going to be louder for the people below you. So they put a bylaw in here saying you can't replace the carpet. It has to stay carpet. So before you go in and start ripping out the flooring, paying for new flooring to get put in and all that, you want to make sure you know that, because if they find out you've done it and you're in violation of the bylaws, they can fine you and make you rip that back out, which is just going to cost you more money. Okay. Again, our job is to protect you and your money. Getting this review by a lawyer is a big thing. And there's nothing wrong with buying a condo. We buy condos all the time for first-time buyers, for every buyers. There's no problems with that. We just need to make sure you are aware of what's going on with the condo when you go to be a part of it. Okay. Oh, I ran 8 minutes long though, Ryan. I tried to do better, but I ran a bit 8 minutes longer. So anyways, that's pretty much the most of it. Like I said, I could talk for hours about buying a home. It can go on forever, but I hope we at least gave you some sort of an idea of what it looks like and where to at least start and what you need to do and what it looks like. Hopefully it's very helpful for you guys. I see that Ryan put the booking link in again. Book a call with us if you want to go forward with it or know more about it. It looks like there's been a ton of questions, which is great. This is what it looks like when you book a call. It's going to pull up a calendar that has our calendar and yours, and we'll find a time that works the best of us. Once we have that first one-on-one call, then you don't have to book again with us. We're free to talk to each other. You can call me, text me anytime with any questions. But that's what it looks like. And honestly, I'll even put it in here too, because I'll be nice. I'm going to put my email. Let's do this here. This is my email, my direct number, and my link tree again is in there. Feel free to reach out whenever, but we do recommend you book that first call so we are free and available for you just to get the first part started. So Okay, again, thanks guys. We are gonna stick around now for some Q&A. If you guys want to throw out anything about real estate, what about financing? Keep throwing the questions out there. We're gonna stick around. I think I might let Ryan take over for a minute here because getting out of breath here. But again, thanks everybody for this.
You did great, buddy. Honestly, 8 minutes over, I think that's good. There's been some absolutely amazing questions coming through. I think that the fact that we're going 8 minutes over means that there's some great interest in the information that we're giving out. So I love that. I did kind of want to comment just a little bit on the home inspection. The home inspection. I mean, one of the craziest questions we do get is it worth it? Right? Like it's but is it worth it? And as Andy mentioned, it's really to not only show you some of the things that might be deficient in the home. If they're small and you want to continue on, great. We can always negotiate that into the pricing too. If it's something that for the $500, you might get 1,500 back, right? So right off the bat, even if you're moving ahead with the home, there's some great advantage to give you some negotiating power with the seller. The big thing is the stuff that you may not want to proceed forward. And the comments that I get from a lot of buyers are, well, so I didn't buy the property and I still have to pay the $500. And it's like, what I would be more worried about is if you did buy that property and you didn't have the home inspection and something major like a cracked foundation or a beam that was not structurally sound. We've seen people that have not done the home inspection, bought the property, and then had to put 60 or $70,000 worth of work to the foundation because it was structurally unsafe. So that's what we're really working to help you, making sure that you do have all the information on that property. We don't want that to happen. We want to make sure that the house is perfectly safe for you and your family to move into, and for $500, that's peace of mind. That's very well spent. Great questions here again. Yeah, I just kind of wanted to comment on one. Hannah said, how much should the reserve fund be in a condo? Is it a percentage of the property value? Yeah, it's a bit of a loaded question. I'm typically on a normal level, what is it, about 5 grand or 10 grand per unit, somewhere in there. The big thing on the reserve fund is it really depends on what the condo complex requires. In Saskatchewan, we do have to have reserve fund studies done on our complexes there. I think it's every 5 years, Andy, something like that. And really what that does is there's a company that comes in and analyzes the condo complex, everything from like how's the roof look, what do the balconies look like, how's the exterior, how's the plumbing. They basically go through and do an inspection on the full condo complex and say, well, you know what, everything's pretty brand new. We don't see a lot of deferred maintenance. So we recommend that this value that you have in the reserve fund is probably adequate. They might come through and say, you know what, your balconies need to be replaced in 5 years and you need a new roof in 10. You don't have any money in that account. We need you to bump that reserve fund up to make sure that the maintenance on the property that's going to be coming up can be handled by that reserve fund. So it's a bit of a moving target. I know that's not an exact answer, Hannah, but really it's about making sure that the money that's going into that reserve fund is able to keep the property running at an optimal level for you. That's really what it's for, and making sure that something doesn't come up down the line that catches the condo board off guard and they need to do a cash call and that comes out of your pocket. So that's kind of what that's for. What do we got here? Super helpful. Thanks so much. Thank you so much, Avindra. That's an amazing comment. We'd love to talk to you one-on-one. Some great comments in here. Oh, what do we got here? Is there a recording? Absolutely. So as Andy mentioned right off the bat, we will be sending you out a recording, in the coming days once we've kind of cleared the air here and got off the call. That recording will be coming out with you, I believe, with the book too, Andy. Does that all come at one shot?
Yeah, it'll be all one shot. Like I said, Thursday depends on Friday too, but it'll all be at one email, all there for you guys. So it will be coming right away.
Perfect. Yeah. Oh, I did see Andy commented on one here. Yeah, perfect. On reputable employers start working. Yeah, great job. Can I give a 3% down payment? Unfortunately, you can't. There is a 5% required minimum in Canada that you do have at least a 5%. Now that can come from a couple of different sources. Doesn't have to be savings all. You can use a savings, you can use a family gift, you can an immediate family gift, you can use RSPs, you can pull that out of a TFSA or a first home savings account. Um, if you have great long-term credit, there's also a program in Canada called a borrow down payment option that you can borrow it off a line of credit or a credit card, but you do have to have not only the ability to borrow that off your credit card, you have to have room in your ratios to handle the additional payment. But that is an option for you as well. But you do have to have at least a 5% minimum to move forward. Great question. Can a friend give us the money? That's another great question. Gifted money does have to come from an immediate family member. Now, what we mean by immediate family member, it has to be a mother, father, a son, daughter, grandparent, grandchild, or a legal guardian. It can't come from a friend, can't come from an employer. And realistically, that's just a rule put in place by the Canadian government to ensure that the money is on the level, right? We want to make sure that that money coming in is not repayable. It is a gift. Most money coming from a friend typically would be repaid in some way, shape, or form. But we also do want to make sure that there is some legitimacy in the transaction. So they did have to put some sort of a rule around it. So it does have to come from an immediate family member. But great question. Great question. How are we doing on our questions here, Andy? I think we got most of them
Yeah.
locked up here. The big thing that I want to finish up with is, as you can see from all the questions that are coming into the chat, every situation is unique. All of you guys are going to have unique circumstances. You know, maybe the jobs are slightly different, maybe your down payments are going to be slightly different, but every situation is going to be unique to you. And we want to make sure that we're tailoring all of our advice and mortgage advice and property advice to you specifically. So click that booking link. It's going to allow Andy and I to really find out about what you and your family need, and from not only the property perspective, but if there are any unique circumstances with your employment, your down payment, anything like that, we can address those right up front at the pre-approval stage and make sure that when you do find that perfect home, you can move forward confidently with that offer, knowing that we've covered all the information that is going to be needed for the mortgage approval. So yeah, click on that link. Really, let's talk one-on-one. We want to really find out a little bit about you, find out a little bit about you and your family, and also answer any direct questions that you're going to have. You're going to have a ton of questions you want to float at us as well, so we can really answer those one-on-one for you. So looking forward to talking to you. Click on that link and get a call booked in with us.
Yeah, for sure. But yeah, it's ask away if you have any questions. If not, I mean, we can always wrap this up and get you guys out of here. But yeah, it's great. There's so much that goes into this that we just can't spend all the time on it, because like, you know, we could even look at one house today and one house tomorrow, and the way we do things with each place is just so different, right? Everything has their own certain set of circumstances. It's pretty crazy, but it does get fun. It's gonna be a good time. It can be a little intimidating off the start of what all goes into it, but as we get rolling with it, you see how it can be a smooth transaction. It can be really fun at the end and very, very rewarding, right? Like it's, owning your own place gives you so much freedom, right? It's starts building you equity and helps you out in the long run. That's the biggest thing, is get that starting point somewhere. We have all started somewhere. Ryan and I were speaking, before this, and we all started somewhere, right? I started in a small house back when I was in Alberta, sold it and moved into here, right? We all started somewhere, right? But the point is just to get started at some point and start building that equity, get that wealth going for you guys, and have fun while we're doing it too. So yeah, if nobody has any more questions, I guess we'll wrap this up tonight. We'll get the recording out to you guys. If, like I said, if you guys do not see this by Thursday or Friday, reach out to me on the weekend. Let me know that you don't see it. There's a very good chance that if you don't see it, check your spam and your junk folders. It may have wound up in there. But again, if you don't see it there, again, definitely reach out to me. I'll make sure you guys get that and you can go have a look at it, watch it whenever you want. So, but yeah, again, thanks everybody. Thank you for taking time out of your evening. We had a really good time with you guys. Hopefully you guys learned a lot from us. And yeah, if that's it, Ryan, if you got nothing else, then I guess we can wrap this up.
That sounds great, guys. Looking forward to connecting with everybody. And yeah, have a great night. The warm weather's coming, guys. So I mean, I know that there's a lot of people that are really starting to connect with us, get their pre-approvals going, and know that as we do head into that spring summer market, that does start to heat up as well. So making sure that you're ahead of the game and ready to have a look at something and write offers and get your mortgage approved. Having that pre-approval in place and talking with us early really gives you that confidence to move into that stage, and really be in a great position to get the home, and win the offer. Absolutely.
Perfect. Awesome. Okay. Well, again, thank you guys. Really good information. Thanks again, Ryan, for everything. I hope you guys have a fantastic evening and a great weekend coming up, and we'll talk soon.
Good night, everybody. Take
Yeah.
care.